Welcome to another episode of Real Deal, Real Students. We have the founders of commercial financing. In fact, this is one of our first episodes where we have all three of us here on this episode. You've got Sua, the main founder. He's the granddaddy of the commercial financing space and one of the very few mentors that actually coaches and has helped over 300 students all around the world, particularly in North America, to advance and to master the skills of commercial financing. You've got myself, Desmond, and you've also got Justin, who you're seeing here. Justin is actually our co-founder who has been heading up operations. Many of the alumni members that are currently going through the different cohorts have gotten to know him over the years. He's based in Florida. And something that Justin is not just a co-founder, he is also a student of Sua. He's been a mentee, and together with his wife and his brother, they have actually built quite a large real estate portfolio. And so along the way, Justin has developed connections. He has developed associations, and there are people, actual real big deals that, you're going to see one that's a real life deal here. And you're going to see how the average residential or the average broker, the average loan officer may run into a deal like this and completely get steamrolled over or not see the dangers or not analyze the numbers properly, not know what tools to use or how to determine whether it's tenable or not. So with that being said, I'm going to pass the mic over to Sua, and I'll have Justin also share some screens. He's going to take you through. By the way, quick disclaimer here. The numbers that we present on the screen, these are actual real file, real deals, but we've blocked out and we've redacted certain sensitive information, obviously, to protect the client and also the lenders and the all the parties involved. This is purely for educational purposes. Once again, if you find value, let us know, write comments below, and we will follow up with you after. Stick on all the way to the end of the video. We have a gift to give you, a tool that you can use to analyze deals like this, and potentially a chance for you to speak directly to Sua and get your questions answered. All right, Sua, passing the mic over to you. What is the deal that we're looking at today?
Well, the deal Justin's going to tell us in a bit here, but thanks for introducing us here, Desmond. It's been a pleasure speaking with the whole entire public this way. I used to do a lot of monologue, and it just sucks because when you're a monologue, you don't know if your pace is good, if you ask the right question. There's no feedback. So I love this that we're having real life people, real life discussion with real life deals, right? And that way, some parts that you don't are familiar with, you can stop me and ask question. And some parts where you can play the devil's advocate to say, hey, if I was a one of the person listening on YouTube right now, what the hell does that mean, Sua? What is that about? I don't get it, right? Feel free to interject because that's how you learn. And I love doing this. I love geeking this out because when I get into it, you see me like I'm so. Some people love cars. I love numbers. I love math and finance.
Yeah.
That's
And
the way it
you
is,
got
right?
30 plus years, right? And so sometimes like when Justin and myself chime in, I tease Sue about this all the time. I always tell him like, for us, the peasants, like for us, the beginners coming in here, like, okay, you're very knowledgeable, you know so much. He's like, how come you didn't see this? And if you can relate with that, if you come from the finance industry and you're maybe in residential or a loan officer, sometimes commercial financing can be quite intimidating, even if you're a smart individual and you know numbers like Sua. So pay attention all the way to the end. Back to
Yeah.
you, Sua.
Yeah. Yeah. So I think without further ado, I'd Justin give us an overview first, and then I'll do interview question because when you don't have the full picture of something, it's like saying go buy a car. Okay, I'm gonna bring back a car. You might not like the color, you might not like the model, you might not like the manufacturer. You get a car,
Yep.
right? So that's the same in finance. Is that if you don't know the full picture, you're not gonna get what you really want,
Yep.
right?
And in this video as well too, right? As you guys watch all the way to the end, you're gonna see. I'm gonna just reveal to you. I'm gonna be that person that's gonna chime in, and I'm gonna help them to present it in the framework called the what, why, who, and how. Okay. Justin and Sue are gonna talk about the what, right? Why they're gonna go into the why. They're gonna talk about the who does it affect, who needs to be involved, and of course we'll wrap up with the how. So if you want to get the how, you got to stick on all
Yeah,
the way to the end. All right.
right on. Okay, Justin, what's this deal about, my friend?
All right. Well, first of all, thank you. Thanks for having me and enjoy going through this process. And thank you for helping me with the deal. I think it's good for the community to learn. And I'm excited to have your insight. All right. So this deal, I reached out to my network, just as you asked us, to be able to help let people know what we're doing, what's going on, going through the process to be able to, from not knowing anything to be able to get started and move from residential to commercial. and now starting to let my network know what's going on. I've already had a few deals come across my desk, which I'm excited about. So this specific deal that we're going to be talking about today, Sua, is this owner is looking for a loan of 3.5 million against a collateral of $16 million. So what does that look like? He's asking for up to 4 million for under 25% LTV loan on a cannabis grow facility, which was just appraised at 16 million.
Justin, can you share a screen maybe perhaps? Do you have any information that's been shared to you?
Yes, I do have a couple things that we'd like to be able to share. As far as like the overall breakdown, let me
So the property is currently in the client's possession?
Correct. So this client is currently, he has 100% lease on a 60,000 square foot cannabis cultivation facility. And he has it leased out for 3 years. He's currently in the first year and a half of the lease. He's got another year and a half left. And he's currently leasing this out at a $95K per month lease rate. And next year, it's going to go up to $100,000 per month. And so this person also has an option to be able to renew that lease, 4 options for 3 years, for 3-year options. So another 12 years on that lease.
Okay, sounds good. Sounds like you got a long-term tenant, which is which is very important to any kind of financing. I've always had brokers come to me and say, "Hey, I got this month-to-month lease," and they don't say month-to-month, but they got a lease. It's a great lease, $95,000 a month. And then when they ask later for the detail, can you show me the lease, what it looks like? What is like, how long are they staying on? They've been here for 5 years, whatever. I say, great. So they have a 3 year, I'm assuming, because I'm in this business for a long time, they've been here for 5 years. They probably have a 5-year lease, right? So it's renewed again? No, it's at the end of the term, but they have not renewed. So now it's on a month-by-month lease. So I'm going, and you want me to get you a 5-year term or 10-year term loan on a month-by-month lease? How does that work? So next month he can leave. That tenant can leave next month, and who's going to pay for the debt servicing every month after?
Yeah, he's stuck scrambling.
Yeah, exactly. The lender's not in business for that. Okay, so let's get back to that. So they need.
Right. So I'm going to share the first document I'm going to share is how the funds are going to look.
Use of funds. Yeah, use of funds is very
important. So we're getting for the use of capital.
Yeah.
So what we're looking at, as we mentioned, is a construction lien. He has currently $2 million in a construction lien.
Okay.
He has back taxes of roughly $300,000 right here.
Okay.
Consumer's energy of $200,000 debt, a closing cost fee of $250,000, and then a lien that's currently at $750,000, totaling out about $3.5 million. This is what he's asking for using the collateral of his recent appraisal at 16 million.
Okay, so this is telling me a story already. Most mortgage broker loan officers drop the ball on this one right away because they say, okay, this is what I need to pay out. Okay, I'm going to look for the money. I'm going like, why? Like, do you know the full story? Do you know where the lien is? Do you know if the back taxes are being put into court? Is the court pulling the lien for closing right now? We got 3 months or 30 days left. Like, where do we stand? We don't know, right? So a lot of the due diligence to me is like, I need to protect my time. I'm a very busy person. If I got 30 deals to work on per year, max, like 24 is what I usually work on. If I could work on 30 deals, that's pushing my week. Like I'm working 12-hour days, and that's not fun. So this comes onto my plate, adding additional stress to my life. Of course, I'll make bigger commission. This one easy enough, right? For a $4 million loan, I'll probably make what, 80 to 120 grand easily.
Wow.
Right. And yeah, they're willing to pay. But the problem is, see, most loan officers are saying, oh, big payday, big payday. It's like, hey, hold on, Horsey. Like, forget about the big payday. You're going to waste 30, 40, 50 hours of this and you become charity worker. Right?
Because they're trying to
You become,
please the client. Is that their commodity? They're trying to
yeah,
please
you're
the
trying to
client?
please the client. The client saying the client is now they look at it. Well, I need the money. I'm willing to pay. So I'm the top dog. No, they're not. They are the peon right now. Because why? The government's peeing on them. The
Mhm.
consumer energy guy's peeing on them. The lien, whoever's the court is peeing on them right now. I call them peon, not an insulting term, but it's like they literally are holding them hostage. So that means when I pursue this, it's going to take 46 weeks to get this loan.
Mm.
Okay. Do I have that time? So then we go back to the client. We go back to the seller, whoever's involved. We go back to the court, the justice. Where's the lien sitting at right now? Where's the back taxes sitting right now? Have they gone into court yet? Right? If they have, where they're at. If they're taking it over possession next week, we're screwed. Right? We don't know what to say. So that's the first thing you need to do due diligence on the deal about whether it's going to be feasible or not. Feasible for us to fund, in other words. Not about feasible, can we do this? Off of the top of my head, when you're saying this property is worth 10 to 16 million early, when you talk about it, Justin, yeah, for 3.5 million, it's no brainer. Even a family office would do this in a heartbeat. Now, just have to find a lender that is okay with marijuana. I push back on this one because a lot of people come in as, oh, marijuana is legal in all states. I say, yeah, that's great. Try sell marijuana next to a school zone. Good luck. Try opening up a dispensary within school limits. Ain't happening. Or if you're next to a church, within a church area, right? You're not going to get it. Why? Because a lot of these people don't want reputation, responsibility, liability, reputation, liability. Credit unions won't do marijuana. Don't care. Zero. It's one of the 7 sins, deadly sins, they call it, right? They don't touch. Who can
So,
do it?
Sua,
Man, maybe
if I
trust.
if I may ask a question, what happens is new construction starts to come in. So if a school zone or other people, does that impact on a deal like this? Say as a community is being developed or something's coming around it?
Yep, big time. So whenever you get this deal, the first thing that we need to do is, has a municipality permitted operations for this business? So one of the first due diligence is before I even do the loan, before I do any of this work, I want to make sure, show me that you have the business permit license from the city. They have the blessing. Right? And then I would actually do some due diligence and behind the scene by checking the neighborhood community plan, the official community plan. If any of those changes that zoning from light industrial to residential or light industrial to commercial, there's going to be a problem in the future. Even maybe the owner doesn't know, even the buyer doesn't even know, because they don't do this high level due diligence. Can you see why, as a consumer, you're screwed and tattooed when you just go in blindly without a professional to help you? The realtor says it's a good deal. Yeah, sure. The realtor's not going to sit on this liability in 3 years from now or 5 years from now. The realtor says, sayonara, sucker. I'm in Cuba. I got my big payout commission, you know? They're not there for you.
All
Right?
right.
You're left
Yeah,
holding the bag.
I didn't know that. I wouldn't have done that due diligence and looked around in this deal without you saying something. So I would have been like, yeah, we would, the numbers look good.
This is
Wouldn't have checked the
great.
city or municipality or anything.
Yeah, this is a great deal. It's grandfather, in other words. Even if the neighborhood community plan has changing the zoning shortly to something more gentrifying is the terminology the city council used to call it. It's not gentrifying. You're just kicking out people you don't like in your city. It's like the pawn shop got gentrified. I don't think my pawn shop investor wanted his pawn shop to be gentrified because now he can't sell it, right?
Right.
So yeah, so this is a great on the surface level, great. And then when you go level, one level down, one level down, one level down. Okay, how can we get this a finish line? We want to make sure that all our ducks are checked off, right? City's okay, neighborhood is okay. It's industrial for forever. There's no plan the next 10 years, so that's perfect. We at least got 10 years, right? So I can ask for 5-year term without the lender squirming. But if you ask for 10 years, they might say, well, we don't know. So let's start with 5 or 7. right? Because why? Lenders in the business are not acquiring property, by the way. Everybody thinks that the lender's best job is to take foreclosure. No, their best job is turn over that fund of that money over and over again. So their primary concern is, I want that money back. Yeah, they haven't lent it out yet, but they want it back. Yeah, that's how they think. Right? They want it back. Bob's calling. Right? So the next step, what is the tenant? Or is it owner operated? That's the thing. Next thing I want to know is it owner occupied or is it tenanted?
Okay.
But
Yeah,
before I go through that, I said,
Yep.
Is there a story explains all of this? Why would you have 300,000 in back taxes? How long has it been? It's usually why. Why? What exactly happened? Well, I use up all my money for construction. Ah, okay, that makes sense. So I skipped the tax man because I can defer him later. With that in mind, when somebody has back taxes owing and consumer debt, consumer energy is owing 200 grand, that's consumer debt. That's probably like past due. Like who the hell has a $200,000 of energy utility, dude?
Yeah.
Right? And a lien. So these three things are red flag. In what way? What do you think? What's affected when you have these things?
Type in the chat, by the way, if you're watching this video right now.
Yeah.
Type in the chat. What before
for
Justin
me,
responds?
Yep.
Oh no, go ahead, Justin. You go. But for those watching the video right now, they can type in the chat.
To me, I'm looking at. I mean, we have back taxes. We have a lien. I mean,
Yep.
I'm
we have old overdue bills.
correct. So like cash flow is the
flow.
business cash flowing to pay the debt, the monthly debt, right? Can we make the bill?
Yeah.
Yep. Okay. So that's one
Mismanagement.
concern.
Yeah. And cash flow mismanagement, right? Like Dave.
Yeah. So these are the concerns that we need to answer basically. So the first thing you want to do is dig for the problem. What is the problem? Because the lender's going to say, how are you not going to repeat this again? How can you guarantee me this won't be repeated? Well, back tax is easy, right? All that stuff is easy.
Is this where getting in touch with the CPA makes
we get in touch with several different people. First of all, one of those would be the CPA. Next would be, we're not quite there yet, but we will get there.
Okay.
So the first thing that I need to do is check for the credit rating for the company and his personal history. It's probably beat the crap out of it by now. His Beacon score, his Equifax, TransUnion plummeted, right? Big time. So that tells me primary institutional lender is off the books. Like it's not even a consideration. Alternative B lender, maybe. But the minute you mention marijuana, they said, right? They want that money to be assured, guaranteed it's going to come back. So they're not going to willing to take that risk, even alternative B lender. So now you are down with to hard money lender, family office. Literally, that's it. Until things are stabilized, then you go back to a B lender, then you go back to institutional lender. There's a capital stack, we call it, right? Slowly, take over time. Take 6 months, 12 months to get your credit back up. Go to B lender now 12 months. Then you go to A lender in 2 years or 3 years. Right? Then you're laughing, right? You're laughing to the bank. And then you got a 5-year, 7-year, 10-year term after that. Why? Because then now you have a history of tenants staying there for 3 years, paid everything, right?
And this is why it's so different from the residential world where it's like a one-off.
Residential, you just shoot fire and forget.
Right. Where in commercial financing, it's the capital stack, so there's multiple transactions. And of course, you get compensated for being the expert who navigates that, be the navigator to help them get through the capital stack over the next 5, 6, 7
years. They wouldn't know how to do this. They wouldn't know how to do that. I mean, they wouldn't know how to juggle it. They wouldn't know the strategy behind it, right? Even you in the residential side, right, Justin? You say, hell, I didn't know you have to take steps to get there. Yeah, you have to. Yeah. Like that's how it works. It's not about, is it fair? Is it logic? There's nothing about fair about business, right? Is it fair that Elon makes like most of the entire world's revenue with his company? No, right? But so what? Right? Businesses don't care. So come back to this. The next step would be, okay, I like this. We can get rid of, we pay off all the taxes, we pay off revenue IRS, we pay off the energy company that they won't turn off the lights, right? They keep the lights on. Closing costs will probably increase with our fee, because when clients come to us, they never budget us in there. They never, like, they think I'm Mother Teresa all the time. I said, I might look good in a kilt, but I don't work for free.
Yeah, that's a good point to know, because in the residential space, I get a commission of what's already there, right? I don't have to bolt on my fee.
Yeah, so they assume. So one of my first things that I would ask is, do you have a budget for us, for our lender fees and our fee, not just your closing fee? Right? What do you mean? Well, I mean, it's going to cost between, I'm just giving wage rough estimate per like $250,000 for just a lender fee and our broker fee. So if my closing fee is going to double to $500,000, yep. So you need to borrow more money. Okay. All right. So that 3.5 is now gone up to 4 million.
And then most of the students would be too afraid to even ask for that 250,000, right? The first place they would actually they would feel scared. They would actually undercut themselves.
Yeah, you cannot do commercial financing if you're a people pleaser. I love dealing with people. I love helping people. But when you lose control of the conversation, you go hungry, literally. Right? You be broke. And I'm not being greedy. I've seen people who actually charge more than my 2% fee. I've seen people who charge 5%. So that 250 grand additional, add on top of that, to not 250 grand.
Yeah. Well, I think so. I mean, we had a discussion previously with a mutual mentor, right? Which talked about, like, you think of this like if somebody has like brain cancer and you're gonna go to the best surgeon in the world, you're not gonna look for the cheapest brain surgeon, the discount brain surgeon. You're gonna look for the best, right? So you're gonna pay for the best to get the best. You're in pain. You've got cancer. Hey, look, you pay the brain surgeon fees, or you go somewhere else and figure it out yourself, right?
This is cancer, financial cancer right here.
Yeah.
This is the financial cancer that we're trying to solve, because without this, it's going to eat away. Like that back taxes, I guarantee that back taxes is probably like 10% interest per month, not per annum. So that per month, that's going to double like in months, in 2-3 months, forget about year. All right. So time is ticking. Governments are not fair, man. They're the worst. They are worse than the highest, most expensive loan sharks out there.
Yeah. And then the consumer energy too. If it's a grow up, right? It's a cannabis. They definitely need the electricity to be running their lights and all the hydroponics and everything else like that, right? So
they need that on. The tenant's gonna bail out if you don't have electricity. I'm sure it's in the clause. So inside a leasing clause, I guarantee you, electrical stability, guarantee, assurance is in there.
Yeah. So what else would you look at? Sorry to interrupt, Justin. Go ahead. What else would you look at, Sua?
So aside from this, the next part would be the tenant profile. Tenant profile is 100% important when it's an anchor tenant. What's an anchor tenant, guys? Anybody knows?
The main tenant. Yeah, type in the comments. Yeah. Right. It's the
when
main
you call
tenant.
It anchor, what's holding this place down? All right. What's holding this place down is the anchor. So when you have, like, say, I have the last client I did had 11 tenants. So I'm going, okay, out of these 11, which are the majority that takes up all the space, or the contribute? Sometimes it's not the majority of the space. Sometimes it's the biggest contributor to the revenue.
Right. For the DSCR calculations and stuff like that, right?
Exactly. Why is that important? Because when they skip town, you're up the creek.
Yeah.
All right. So when was the last time you asked for their personal financial income tax statement when they're a residential tenant? The answer is never. That's a privacy law issue. When it's an anchor tenant in commercial space, we are allowed to ask for financial statements from the tenant. It's like, seriously? Yep. That's part of the lease. That's part of the lease. You need to provide us financial statements. Why? Because I want to know that you have the ability to make payments on this $95,000 loans per $95,000 rent payment per month, plus utility that you have to pay. So does your financials reflect that? Ooh, but it's my uncle's business. Ah. So what you're telling me is the number is not going to show that you're able to manage to pay that rent. Is that what you're saying? You see?
Yeah,
I just
no,
saved
that's good.
myself. I just saved myself 50 hours worth of work just because of that. Go down the rabbit hole.
But you technically saved me 50 hours of work, so I appreciate that.
Yeah. So the tenant is not going to be able to make profit, and we want profitable tenants. The lender wants profitable tenants. As a landlord, so should we. Right? We can't just say, pinky promise we'll make payments. Yeah, good luck at that. Right? The court's going to say,
So
and what made you decide to allow this tenant to move in without paying rent first month, last month?
yeah. So let me understand this correctly, right? Like, I mean, I know that when we train a lot of the alumni members through the cohort, obviously the biggest difference between residential and commercial is that, on the commercial side, we're not really looking at people's personal credit score, their Beacon score, their Equifax, and their TransUnion. However, even in the commercial side, we do need to do due diligence to make sure that the loan is serviceable, right? It's more about the numbers, and
that's correct.
The income statements and everything does paints a picture that it's serviceable.
The property itself is more important than whoever the client is.
Right.
Right.
Yeah. But we also do want to know about
the
anchor tenant. We want to know about the anchor tenant and have a story about the anchor tenant as well too, right?
Yeah, exactly. Do they have a website? Do they have a history? Where can I find them publicly online? Can I Google search them? Will they show up when I Google search the tenant?
Yeah.
Oh, the tenant's ABC XYZ holding company, but their name is actually Pizza Hut. Oh, then where would I find the reference in the lease that would mention that?
Right.
Right.
Now I know that you and Justin were analyzing some other documents as well too. Justin, can you share any other things? Like, so what else did you guys look at that helped you to determine this?
So I would ask, for say everything looks good, the tenant looks good, and the next time I would say, okay, do you have any appraisal, anything else about the property, perhaps information that you know about the property itself, subject property? Well, I think Justin, you said what, 60,000 square foot property?
Yep. So we have this
light
document
industrial
right here.
Okay.
And then we have this comparables. So what one would you like to be able to go over next?
Okay. So this comes from the appraisal. They have different types of ways to look at the subject property. This is similar to the sales comparable in the residential side. It's like, okay, this property is sold for this in this neighborhood around this area, right? So that's what they're comparing to. How much, if I was a lender and I was to liquidate this property on foreclosure, how much could it get out of this money out of this place? That's what it's based on. Now, there's several ways that they calculate this. That is, we don't go into this right now, but there's a sales comparable is very similar to residential side, as you can tell, right? How many property was sold, how long it was sold for, how much per square footage. The other thing that we won't get into, I think it's in a separate page that we look at, is an income approach, but it's very simple.
And Justin, what did you point out? I remember when we were going over this document, like what did you point out? What did you observe just from this document?
Yeah, one of the most important things and that's a good question for me, was I just looked at the cap rate was consistent no matter what the size, the square foot, the docks. The cap rate was the same.
Yeah. So do you know why?
From my first assumptions and looking at this, is that's the expected rate that they're looking to be able to make in business.
Correct. Yeah. So every investor says whatever the income is generally from the property is 7.6 cap rate in this whole neighborhood. So I don't care. I'm going to buy one, pick one, anyone. They're going to be 7.6 no matter what. So that's how they negotiate the sale price. Unlike residential, right? It's like, oh, it looks nicer, but it's just across the street. I can buy one for less than 50 grand. But yeah, ours is nicer. I got a soaker tub. I got a hot tub inside my bathroom. It's like, I got a marble table inside the kitchen, right? Business, commercial, real estate, they don't give a crap about that. What is my cap rate? I'll buy based on that. So there's no stupid numbers. They pick out a rabbit hat, right?
Yeah, like you can see like the very first one, the low one has like no docks versus the other ones that have, higher ceilings, have
More
more docks.
value.
Yeah.
Yeah. Yeah. Okay. So yeah, your SOCA top might come to play, but it still has to abide by the number of cap rate it generates, the income, right? Most of you guys know hot tubs are used once a year or twice a year in the house. It's like it's a worthless piece in the whole house, really. It looks good, but nobody's gonna spend an hour waiting for the tub to fill up and use it. So this is a great comparison, and one of the startling thing that I bet you most residential people look at is that when they look at it, especially realtor that don't know commercial, they go into commercial and say, why are they using comparable? Like, look at how long it took to sell to some of these property. Like in residential, you could have like recent sale. What's recent sale in residential, Justin? How long is a recent sale?
Yeah, I mean,
Usually.
recent sale is the time frame in the house that was sold in the area from the time that they've sold. So the most recent house that was sold in the area, right?
It's probably like 30, 60 days,
30,
usually.
60 days,
Yeah,
I
I mean,
guess, yeah,
roughly,
with
yeah,
a
give or
month.
take. I mean, it depends on the area, but yeah, 30, 45 days-ish.
Anything more than 6 months is already getting like
Yeah,
really
look,
old.
so look at this. You got 2.8 months. That's time sales in the market, 12.4 month, 13.1 month, 23 months. If this was used in a residential appraiser, they would get tossed out by the lender.
Yeah, 2 years.
It's like, who the hell did this? You're using sales comparable 2 years ago. Seriously? How's that affect today's price, right? It doesn't, but in commercial, it does. Right? So you can see some of these maybe even listed for like years before they sell it. Right? Because they're asking for a ridiculous amount number. They're asking for a 6% cap when it should be 7.6% cap. Right? What's a 6% cap? It means the asking price is too high. Right? So that's how they have to lower the price to meet the cap rate to be able to sell it, because nobody's going to buy it unless it's like a brand new property. Then they have some premium, right? And you can tell some of these property are much older, 70, 80, 90, 79, right? This is 1999. So that has a little bit to play with it. Okay,
No, that's a good point.
Yeah, so
I realized, Sua, and for what you were saying for me and being in the residential, like time since sales in months, this is time on market in residential, right? So time on market. And so the language, if I have a barrier, like I didn't even know what that meant, for me. So then now I don't know how it plays or how it calculates into the deal, so now it makes more sense for me to be able to notice that, because that means that they're asking too much and they're not willing to budge to get to that appropriate cap rate.
That's right. So you invested before skip them. All right. Like 36 months on market and look at the cap rate divided by the listing price divided by the cap rate. Yeah, they're asking for way too high. You can see the difference too. It's the exact amount how high they're asking for. Like it is. I call this is the most brutal investment in the world when it comes to commercial. It doesn't care about your feelings. All right. So aside from this, what else do we have?
All right. From this, we go over here. We have a little bit of a breakdown of what the current owner has to kind of put up and what he's asking for. So we kind of get the mortgage request down here. We get some of the liabilities that is already there. So you asked about the tenant, but then we also have some information on the owner as well. Is that matters?
Yes, it does to a point, because some lenders want personal guarantee on top, right? Depends on the loan to value. If the loan to value is very low, like less than 50, I can care less about the personal guarantee. I'm laughing to the bank, right? I think about the property. Family office only think about that. They don't care about personal guarantee at that point, right? Okay. But when you approach 60, 55, 60, 65, 70, they would probably want to chase after you for the remaining of the money if there's a shortfall. So the only way to do is find out the personal guarantee. And from the looks of it, this guy is already personal guarantee $500,000 in debt for two of the companies we invested in. So that's a carrying of $500K already. Okay. Is it an active company? Is it a company with asset? We don't know. So that's another question you need to ask, right? Because also, if they have operating companies there, we can use and leverage their income from those if there's a shortfall to qualify on this, which is really amazing. It's really amazing. It's an independent company. If they own 50% or whatever, we can use 50% of that EBITDA, 50% of that net income, right? Which is unheard of in residential. It's like your partner's got a business somewhere, and yeah, we can use your partner's business to help qualify for the debt for the commercial financing on the loan that you're buying for the property, right? In this case, it's actually negative because it's not related to this property. If it was a construction loan from this property for 500K, that way we just pay it off, right? And a personal guarantee 300K. These will be paid down when feasible. So what does that mean? So there's a 300K Oswald personal debts about something.
Credit card debt. Right.
In
Areas
credit
I
card
see.
debt.
Yep.
Okay, there it is. There it is. Yeah, yeah. Holy
300,000.
smokes!
Yep.
His credit score is punished, and I don't know if they're going to renew his credit card if he doesn't pay that down.
What do you
Right.
The question would be like, what did he spend that 300,000 on? Like, you go buy a
Construction,
Lamborghini.
I'll bet. Right? I'll
Yeah,
bet you it's
construction. Yeah.
that construction mortgage. Yeah,
Yeah.
yeah. That's my bet. Buy Home Depot, right? Everything Home Depot.
Because he
are
says
charged
I
up
have
to
no
get you.
personal debts. Yeah. So it'd be the construction. Yeah.
Yeah, yeah. So mostly for the business, right?
Yeah.
Personal guarantees for the business, not personal debt.
Equipment,
But
materials. Yep.
yeah. So that means if that 300K is part of the it's 3.5, if that's confirmed that, or do you need to add on top of the 3.5 now? Right.
Yeah,
So you
no, I
got
haven't
250K. Yeah. So now
didn't
two
have-
questions you
I
need
don't
to
know.
ask. Two questions you need to ask now, the client.
Okay.
Is that 300K above and beyond the 3.5? Right? Because now you have to add the broken lender fee of $250,000, and now you have to add it now 300,000. That's now the 550 on top of the 3.5. So you see how the loan went up to 4.1 now?
Yes.
Yeah. Sometimes the client comes to us and they don't know what they don't know. This is part of the due diligence. Say, well, to get us to there to be more comfortable, family office doesn't want you to have a 300,000 credit card debt. Right? Get that paid off so your credit gets built. So then we can move you off our books in 12 months. They want to use that money back, recycle it for another fee, another loan. They make money mostly on fees. They don't make money on interest payment. Their sponsor, right? Their investor makes that interest rate, not them.
You
Yeah,
know,
the family offices.
as you're
Yep, go ahead.
speaking, Sua, the one thing that's thinking in the back of my head too is maybe even if there's room in the loan and we see that this person has $300,000 in credit card debt and there's enough collateral to make it work and the numbers make sense, we could even create some room for him to consolidate that into one debt so then that way he can remove that, right?
Yep. Because we're strategic. We're like capital strategists. We're not gonna. I'm not a glorified application taker, right? I would say no, like why don't you want to pay off the credit card? It makes no logical sense. Zero whatsoever. A, it impacts your credit, right? B, it's eating away high interest. Like even if same interest, okay, say you got your whatever it is, Capital One. They love those 1.9% interest. Then it goes up to like 18, right? Yeah, you got 6 months of 1.9%, but okay, fine. After that, it go back up to 12% or even higher. Can you assure me you paid that off in 6 months? 50-50, most likely, right? Okay, I'll benefit of the doubt you can't pay it off in 6 months. But why don't we do this? Lower your stress and strategically put you into a better position. I can move you out of this 12 months high interest within the next 6 months. How's that? What do you mean? Get your credit score up. I'll move you to a B lender, which is like 6, 8, 9% interest instead of whatever it is right now, 12, 15. Family office usually charge, right? So you can move it out in 6 months. Yeah, they don't care. You can move in 3 months. If your credit score high enough, you relocate. They don't care. They already got their money up front. They didn't care less. They would love it because it's like, hell, man, we got the fees for 12 months, and the guys pay us off in 3 to 6 months. We're more than thrilled. Right. So that's why I love family offices and private money, hard money lender. There's no penalty to pay off early, unlike the banks, right?
Nice.
So when they paid off, the credit score's gone up. We move into a B lender, alternative B lender space, and get the finance for the next, whatever, 1 year. So now they have 2 years of tenant. 2 years, the tenant's paid on time. When you have 2 years of financial statements, I can bring it to a trust corporation, not a credit union, or even one of the big bank. Could be Wells Fargo for that matter, right? Or an insurance company. Liberty Trust, I don't know. Mutual Omaha Trust, they have money. When you got a solid anchor tenant that is medicinal license, that's performing 2 years straight, financial is strong. And if the rent for the medicinal company here is only like 15% of the whole entire gross profit margin, they're like, wow, this company's not going nowhere. And when you have the infrastructure set up for that, yeah, they're not going anywhere. They can renew that lease for the next 20, 30, 40 years, right? Milk the baby. This is a great deal on the surface if those questions are answered.
Okay.
Right. Yeah. If the financial for the tenant is good, or they have a really good story, right? What do you mean a good story? The owners, the operators are farm producers. They have been farming for who knows how long. They've been doing hothouse tomatoes. They do herbals and all that stuff. They've grown inside all these greenhouses, so they're familiar with that. They're familiar with enclosed space farming, right? Not open space.
Yeah,
right?
like
We're not potato
hydroponics
farm
and
from
stuff, right?
from Idaho, right?
Yeah.
Yeah. Nothing wrong with them. I love potatoes. No, I don't want to be on the bad side of potato farmers. They got potato guns. So, hey, those hurts. Hey, make money, help them make money. What is the scariest thing right now is who to get the money from. That's the hardest part right now of all of this. It's not about putting this deal together because I'll show you. So we got all the information we have. Let's extrapolate first. Let's see if the numbers make sense. Right? I'm a numbers guy. So I'll show you my spreadsheet and then I'll ask you for the numbers to throw it in.
Okay.
Right? So with
By the
this
way,
in
if
mind,
you've made it this far in the video, okay, and this is starting to make sense for you, or if you felt even overwhelmed, it's okay. Put in the chat, just type the word overwhelmed. That's okay. We've got a solution for you. But if this is making sense for you and you'd like to learn more, stick on all the way to the end as well. We've got a solution for you. So either way, we've got a solution for you. Take a look at this.
Yeah. So this is one the graduates get. Once they finish, they got the deal desk. I mean, I go through all that stuff. I mean, it helps you glossaries. Yep.
Correct. And that's
We have a lot of terminologies.
You're speaking about the 12-month mentorship with the 6-week cohort that
That's right.
You've been very famous for, right? That's the training, the professional training that you
the
get.
300 graduates who took this over the 12 months and as well as the fast track certification at the beginning, the 6 weeks. I gave all the deep dive about all the acronyms that you need to learn because if you don't know the language, they treat you like a rookie. They treat you like a putz, I would call it. Not disrespectful, but they don't give you the time of day.
Yeah.
If you call up on the phone and they throw a whole bunch of numbers at you. What's LTC? What's the cap rate? What's what's a EGI? What's a ASA? What's EBITDA? What's NOI? Like if you can't speak the language to them, what's a capex? What's NTA? What's a yield? And if you don't know what to say, they're just like,
yeah, if you don't
they
know
don't want to give you
T24, you don't even know accounting, right? Yeah.
Yeah, they don't. Yeah, if you don't know what they want, they want an engage. Some of them will want an engagement review, and what the hell is that engagement review? I never heard of that. Most people would say, right? Well, that's another level of financial statement that you need a CPA on your team. So when Desmond asked about earlier, you need a CPA. You need a CPA for this deal, and I'll show you why later. We need projections run out for years to make sure this number really works. And we tell about here's cannabis right there, cannabis license. Avoid. What type of lenders to avoid? What type of lender is acceptable, right? And that's how you know, and whether you're going to waste your time or not. We teach about that so that you don't waste time. What kind of lenders we have on the Canadian side of the border? Which ones in the US that likes this kind of deal? We have it all mapped out. So that's not the hard part, right? That's the easy part now. I know it's hard for everybody who don't know the industry because when they just come in and say, we have that. We have the relationship built. You leverage us. You leverage our reputation to get past the gatekeeper. When you say you're one of Sua's graduate, commercial financing master's graduates, they give you more respect by reputation, because now you're leveraging our coattail to say, hey, please give me a chance because I got proper training. I'm not an idiot.
Yeah.
Right. I'm not a schmuck who just throw, bubble gum at the wall and hope it sticks. All right. That's what most loan officers do. They throw bubble gums on the wall, hope that the loan sticks. Right. It's like, man, you're killing your reputation that way. Not just from the client, from the lender. The lenders hate you. Right. They're wasting your time. So with this, I do all the due diligence. You know all the question asked earlier, Justin? Yes. If you were a lender, could you imagine how much you love me? I have answers to all those questions. They say, oh my God, he knows everything. All the problem, how to solve it, what the solution is. There's a strategy behind it. Your money's getting paid back in 12 months. When do you want the money?
Yeah, because then the lender feels it like they're speaking with someone sophisticated who understands what their risks is and their risk tolerance are, what they're looking for, right?
Totally. They understand what Sua understands about us. They understand Sua understands our business. Sua understands that I am liable for my investor. Sua knows that I'll get my money back, and this is how he's going to get it back. This is how he assures he can get it back. He's done all the homework for us. So now all I have to do is check, make sure the homework was done properly. That's it. A lot faster for them than trying to go through what I had to do. Right? So they love us more. And I can negotiate the pricing much better. Interest rates, the fees are downward.
So can you just take the 30 seconds to maybe even also what is the importance of building that relationship and how that, compounds over time with the lenders when they develop a relationship with you, they see how many files in a day and applications and
for sure.
He plans me something. Now that I've worked with you multiple times, I'm gonna just, I give you more breath. I give you more, freedom.
Yeah. I'll tell the opposite of this. Okay. The opposite of this, I'll give you an example. You don't know none of this crap and you just blindly send it to the lender and the lender looks at you like you're a fool. Like you don't know we don't accept this. We don't even want this. Like, don't you know? Like you just wasted 20 30 minutes of my time, just a conversation. I'll never get back. I could have worked on a good deal, a live deal that works, that works in the green, right? That works in a good section. Everybody wants. When I send them a good deal, they get paid off over time. I'm dealing with this lender, for example, 22, 3 decades. Say you're my lender, Desmond. I know you by first name. I know your son. I know your wife's name. I know hell, I'll present you a cognac every now and then on your anniversary. Right?
We play golf or we eat sushi together, right?
Well, yeah, exactly. We have sushi together. And here's the thing. Some deals that does not work. I would say, hey, Desmond, I need a favor from you. This deal won't fly. It will fly in year 2, year 3. This year, it's a startup. It won't work. I have vet the sponsors. I know Justin. I know his brother. They have a history. I have checked it. They're not online. These are I call them the old school. Old school, like us. So the 80s, 70s. We were born in the 70s, right? We're old school. We shake hand and this is it, right? If I don't commit, I don't fulfill this, my dad who's in heaven, he'll come down and kill me, right? That's the kind of old school. So I trust him. I know we can make this work and he'll keep his word and we will do or die. This deal is gonna make money. It'll print money in year 2, year 3. Can you go to bat for us?
And that's all relationship capital right there.
That's relationship capital. You will not get this deal funded. I've done many times like this over the year. I get 2 to 3 asks. I call it ask. Ask. I get 2 3 asks a year from the lenders I have built a long, deep relationship with. And usually the answer that I get back is like, Sua, only for you. Do not leak this to anybody else. I'll strangle you.
That's
right?
actually one of the benefits that the cohort members are now leveraging, that because they
Yeah.
have no reputation, but they leverage you to build that relationship capital with the lenders, right?
Yeah, for me, I said, and I can tell them, look, we can have recourse, non-recourse, a function of it, we can add recourse. And I would actually negotiate on their behalf. And I would actually do the hard part for the lender. See, a lot of lenders have problem with this is that, hey, Sua, in this, we cannot force them to get insurance, but we need to get them partnership insurance to buy each other out. Because Justin and Jeremy, for example, okay, they're in this together. This is a high risk and high responsibility. You cannot just replace people like this easily. It's a highly regulated industry, and you need license. Justin has the license. Jeremy has a license. One of them dies. How is this going to work out? How's it going to play out? It's going to be a mad mess management. And who's going to be involved? Greed. Family is going to get involved. Jeremy has a sweetheart or wife, for that matter, for example. Jeremy's wife might not like Justin. Jeremy's wife might not like, your wife. And they want to take you out. And you say, the hell no, I'm printing money. I'm still alive. I'm going to milk this sucker. I'm going to buy Jeremy out. Okay, well, that's not going to work. I'm going to refinance, going to do this. And his wife, right? Jeremy, gone for a bit, passed away. His wife says, I'm not going to sign nothing. So now we're at a dead impasse, and this business can explode. And then who's going to lose? You lose. Everybody loses. And guess what? Gets to court, and the lender loses. So the lender says, so we feel more comfortable. I get it. I'll go to bat for you. But I think my investors would want something like this in place, but I cannot force. It's tied selling. It's illegal in the industry. So I need your help on this. I said, I already know. I'm right ahead of you. I already told Justin he buy life insurance on Jeremy. Jeremy buy life insurance on Justin. If something happens, they automatically buy each other out. It's in the paper. It's in all the, we call this irrevocable power of attorney on both of them. So they have power over each other and take over the management. Right? Perfect. I love you. That's it. That's how we get the deal work. Sometimes I also have, say this was somewhere else. Okay. This was already currently at Wells Fargo, Justin. You and Jeremy at Wells Fargo. This loan is there, the $2 million construction loan. Wells Fargo found out the tenant is not an industrial tenant. The tenant is now growing marijuana. They're freaking out. The management's freaking out. Their sponsor, Wells Fargo's expensive. Well, sponsor are what? They're Mormons. They're freaking whatever. Latter-day Saint, whatever. Church of Latter-day Saint. They don't want these weed stuff in their thing. They don't want their investment money to be financing shady underground people. That's what they think. They don't care what the government legalized or not. They want them out. So now Wells Fargo said, we want the money out. Right?
Mm-hmm.
You're coming to me and say, well, we can't get you another financing because this whole entire thing is a mess. We got to clean this mess up first. We go OB lender, figure it out, get the financial, get the CPA involved, show them it has been stable the last 2 years. Maybe Jeremy and Justin have been not filing taxes. That's what the $300,000 owed. That's why the CPA is involved now, going back and doing all the financials in the past couple years. Now we're getting a review engagement from the CPA instead of just a Liberty taxes. That's what you guys been doing, all right? And the government's frowning on it because one of the requirements from medical industry, I am certain of this, the health regulatory body regulations needs certified by CPA. They don't mess around. There's a specific, I think 208E or something like that in the IRS, right? In Canada, same. Health Canada, Health United States, right? They want it done that way. Specifically because nobody can F around. Nobody can selling it to places, selling to the black market that they shouldn't be selling to. Production shows this much money went to production, and then sales revenue is why is it should I be much higher? Why is that so tight? This is not a commodity. This is high-end profit margin business, right? We're not soybean. This doesn't make sense. Somebody is selling to the black market. That's exactly what it looks like, right? So that's why CP needs to be engaged. to that level, right? They make sure that you are doing your thing. You're engaging them into reviewing all the documents and reviewing all the financial expenses and all that. So anyway, let's get back to this. Quick run. Say we got all of that bullshit, excuse my language, can be taken care of, and I can assure that the tenants are good and the financials are done properly. And that's why I got CPAs. I make sure all my mentees have CPAs in their team. Always. They have approved CPAs they refer business to. And I get most of my referral actually from CPA, not from realtors. Right? Probably like 80% of my business outside of renewals, outside of my existing client base, or from CPA. Why? Because they need my help to help their clients.
It's not just any CPA, right? So it's like it's the ones that understand fractional CFO services that actually are helping their clients to build their wealth, right? Their net worth.
And if you have a CPA friend out there that don't know about fractional CFO services, fractional CPA, I mean, they are not a dime a dozen. The IRS, the CRA, CPA, that's a dime a dozen. That's all they care about, filing taxes and tax efficiency.
Yeah.
A lot of time I tell my CPA that the client's willing to pay more taxes. They go, okay, so most CPA, I say, the client's willing to pay more taxes. What do you do, man? You're like, you drugged them? Like, what did you do? Nobody wants to pay more taxes. There's a reason why we want to pay more taxes, all right? For certain things, it makes sense. We'll get it back later anyway. So get down to this. They need 3.5 million, and all our conversation comes into the fact that they need probably 4 million or 4.2. Depends on what that 300,000 is.
Yep.
Let's say 4 for round number. 4 million. The appraisal came back 16 million, apparently, right, Justin?
We're looking at line 14 here, right? Line 14, line 13, right?
Yeah, we're looking at right here. Whatever the purchase price is, whatever the appraised value is, and what is the loan request, right? And
did you actually see the appraisal, Justin? Like, where did that 16 mil come from?
We have it. We have it. Yeah.
Got it.
Yep. So they have a hard equity of 12 from 16. Make sense? Simple math. So that's huge. I mean, the loan to value is just so small. So ATV is like request is 25%. Right. So any family office would take care of this if they're okay with marijuana. Never hide this from the family office. The first thing comes out of my mouth is a great deal, but it's a weed business. Okay, Sua, have a nice day. Click. Like, or is like, okay, that's interesting. Tell me about it. Then we know they're okay. Don't waste people's time, right? So that's my first conversation with my guy, like Bill, for example. You know, he does family office in the United States. Pretty big player. They have money, right? What is the tenant paying? Simple math. This is simple calculators. It's almost like a quick run, right? Simple math. 95,000 in rent, right?
Correct. This year it'll run out at 95,000. Next year it picks up at 100,000.
Okay, even if we use 95 to start, we can play out 100,000 later, right?
Yep.
Vacancy. They always have vacancy. What do you mean? They don't care who's in there right now. What they care is what the market vacancy is. If the vacancy is higher, it probably is. In this town is like 10% vacancy. So you can override it. You can override the number anytime that's different, but it's automatically calculated. It's averaged out, right?
Yep.
Normally, it's 4% on metro city, suburban, but this is a small town.
Yeah, small
but I don't think vacancy matters.
8 to 10.
Yeah. Yeah. What's the population?
Population probably 40,000-ish, maybe.
Yeah. Okay, so that's a decent sized small town.
Yeah.
I grew up in a small town of 3,000, man.
Well, that's kind of the surrounding area. If you get to the correct location, this is probably about 6 to 8 total if you go into the exact city.
Okay, yeah. So when somebody gets a speeding ticket, the whole town knows.
Yes.
That's hilarious. It's like so-and-so sped down Main Street. Well, we only have one street. We call it the Main Street. We don't know what. All right. What about the amount of expenses that they have, right? So the property tax, we figure it's around 12 grand, right?
Yep.
How do we know? I use AI to dig through the municipality numbers. And based on what the real estate price is, it comes out to the closest number we can find. Realtors love leaving the stupidest stuff out of the picture, including property tax. I'm like, that's kind of important when it comes to financing, right? They make you phone them, harass them for stupid property taxes. Thank God to AI today. And that's why, like, in our workshop, I leverage AI massively to help do this. The appraisal, the environmental, oh God, that's like 60. How many pages was appraisal?
52 pages.
52 pages on the appraisal. This is not residential. How many pages are on the residential appraisal report? A dozen or two?
Yeah,
maybe.
Yeah, definitely.
Right? Not anywhere near this in this complexity, right? You got 52 pages. You're reading it on the weekend. There goes your weekend, right? So that's an AI would help you streamline. We have the proper training. We teach all our graduates what exactly to say to AI, how to prompt it, and how to give us what we need to look at. We need our eyes on the ball. Where the problem is, we give them all the red flags at the top 10 red flags that we need our eyes on the ball on. Which page is it located? Give me that page. Then I go 5 minutes. I read the page. Is it negligible or is it serious? Then I need to take intervention is what I call it. We teach about the 5 I's, interrogate, all the stuff, investigate, to about intervening the whole entire situation. And why it's important is this stuff anybody can do. A grade 11 I can hire. As a matter of fact, my administrative assistant I hired to do this. Punch in the numbers, all right? My sexy secretary, punch in the numbers, miss, or him for that matter. So I don't have a female one because my sweetheart doesn't want a female secretary, so I got a male guy. So he doesn't dress in a skirt very well, so I tell him he's just normal, Just kidding, guys. For those, I'm just playing with you. No kilt.
We're just seeing if you're paying attention. We're seeing if you're paying attention, right? That's right.
Yeah. That's it. Just seeing you paying attention to what I'm blabbing about. All of this is automated. Like all of these things, even though the client never told you, even though it's missing, we know what the averages are. We use leverage AI. The database is created. It's updated every year. So it's automatically puts in here. So even if the guy says, yeah, blowing smoke up my hoop, you guys don't know what that reference is. Don't worry about it, It's like, pie in the sky numbers, right? They say, yeah, it costs you. Insurance is only 10 grand. No, it's not, man. We know how much it is. Like it's like 50 grand and for insurance for this kind of thing. It's like weed.
They can't pull the wool skin over your eyes, right?
Yeah, they can't pull the wool on my eye. Yeah. So repairs and maintenance. Oh yeah, it's a brand new building. We don't care. We're setting aside 21 grand to repair this property. It's massive, right? Over the years, it eventually needs repair. In year 5, year 7. So all the numbers are calculated according to industry standard averages. We have them. There's nobody who can, mislead me when it comes to underwriting. I'm very good at what I do. That's why I've been teaching people. It's like, you guys need to know this shit. Excuse my language again, but I get mad and I'm passionate about it because people are just ruining people's life, other people's time and life because they don't do the proper due diligence. They don't have proper mentorship. And it's like, it's not just the client that loses the deal. It's that the lenders are pissed at you for wasting their entire weekend to go over your stuff and knowing that all these numbers are fabricated or just like off, like way off in the left field, right? I don't know baseball, but I heard the left field is pretty bad. So, what is the net operating
roll right now, guys? I hope you're enjoying this. This is a taste. This is a snippet of what he's like, right? Wait till he's mentoring.
I make learning fun. I make learning fun because I used to learn statistics, and I hated that workshop. I fell asleep in statistics because all do with numbers. And that guy was no fun. He was a monotone. If you don't really care about this, I don't care if you're here or not. I've been paid to do this, so I would just teach like this. It's like, I want to learn, but engage my curiosity, make it laugh, make it funny. Like, what does the traffic incident have to do with anything? When the guy runs a red light because he's got his wife pregnant in the back, is giving baby. That's funny as shit. I want to learn now. Do that.
All right, back on track. So then
Not
when
gonna
you plug
try.
in these numbers, right? I mean, like
So
how
so
much
even
time does this
though even,
having like this feasibility
it's
like
like
DSR
this is like
calculator?
5-10 minutes. This is like
Yeah.
5-10 minutes because it's all pre-populated. All the yellow is what I
Yeah.
put in. The yellow stuff
Exactly.
I put in, right?
And
The
this
rest of the
and
stuff
the cohort members, the alumni members, they get this. It gets updated. It's plugged into the agentic AI that you've developed with the team, right? That
yep,
nobody else in the
yep.
industry is using right now. Yep.
No, they don't even have this. Hell,
Yeah.
if they have this, people would be paying an arm and leg to get it.
Yeah. So
All right.
CPAs, if you're watching this, do pay attention. CPAs, you guys know, like when you create pivot tables and tools like this is something that's very helpful for the business.
Yeah, and I was updating, upgrading it, and adding more stuff to it. It's just become complicated. I'll show you later when the other resource that I have is just massive, and it depends on certain types. Like this is for this quick run, and then there's a more detailed version. I'll show you in a minute here. All right. So this just quickly tell me, okay, this is doable or not. Yeah, even with all the expenses, even though they're hiding all this, they say
Actually,
they
so
make
I'm going to
1.1
interrupt
million.
real quick here, just in case anyone, if you're not watching this video all the way to the very end, maybe you're putting on pause, or you're saving it for later. I'll cut right to the chase here. I'll just tell you this, okay? Can you see how much value Sua is pouring into this, right? So many people want to
And
learn
this is free, I'm
financing.
giving you.
Yeah, absolutely free. This could almost be like a workshop in itself. Speaking of workshops, we are doing one. So click the link below, pick up the tools that Sua is giving, and come to the workshop so that you can actually ask live questions in person. And if you're a good
Yep.
fit and he feels that you have the skills and the coachability to learn commercial financing, you might be one of the lucky few that actually gets accepted into the next cohort. So, Sua, go ahead, continue.
So let's say we now know this is a family office, a hard deal. So it's going to go to family office. That means they're going to have to pay up the yin yang for it, right? What does that mean? The fees and the interest rates can be much higher. So the first mortgage perk of like 15% in interest. So that's a debt servicing, 600 grand. So even with 600 grand, so now he has 600 grand, his net operating is 834. You notice? In year one, he's only making 230 grand out of the $1.1 million. So back to the owner who bought this property. When this tenant is moving in, he's facing this situation. I don't have a choice, Sue. But well, you do have a choice, but at least know what you're getting into now. Right? I said, well, I can get this deal done, but this is how much this is how much you're gonna pay, right? And what else?
But
What
that's
other
why it's
thing?
also in his
Well,
best interest to increase to clean up his credit and then to basically repay the family office and then to rotate to a B lender in the capital stack, right?
yeah. So what's the lender and the broker fee? Well, there's gonna be between me and the other me, Justin, and the other client. I'm getting 1%, you get 1%, so they get 1%. So that means there's 120 grand broker fee. And the lender fee, I'll do my best to negotiate down to 40 grand. They want more to start because it's high risk. But I'm selling them your dream, basically. I'm selling holy moly, the wind start coming.
Yeah, suddenly there's all that wind blowing, right? You're in Ho Chi Minh City right now, obviously, and you're on
Yeah.
the penthouse rooftop, the pool there.
I'm gonna
So
go to the side. I'm going to the side where there's lit, so that's wet. So I'm gonna bring this baby around.
that's right. Any
Holy
any
cow.
questions from Justin so far? Justin, maybe you can chime in. Anyone watching this, what's been the value of? I mean, I know you're a co-founder of the academy as well as also the capital advisor side, but you came in, fresh and not knowing how to. What's been the value of working with Sua as a mentor, on files like this? How much did it boost your confidence?
Yeah, I mean, that's a good question. And today I can actually sit down and talk about a deal and share information. I know where to look. Talking with Sua and consolidating, and my wife and I have had 4 files come across our desk. We're able to kind of vet a couple, share with Sua, condense that time, know where to invest the time. Going through a process like this, I get the speed of education. I get the confidence to know what it is that I'm looking at to go back and talk to my client and ask the right questions with Sua's help. So then that way we can get the right information so we can get the deal across the finish line or we can kill the deal right away. Des, 2 months ago, I wouldn't have had the confidence to even pick up this deal or even talk about it. But today, here I sit, I'm learning about it. I'm interested in it. I'm excited. Plus, I can help more people in the market in the area, more people in my industry, more people in my family. A lot of people in my family are in residential, and and we are hesitant to get into the commercial space. And I can't share with you how many deals that we've let go or how much money we've left on the
Big
table
time.
because we didn't know what we were doing. So I have a lot more confidence today. I'm excited to dive in and help these people and even educate these people how to do a good deal, put a good file together so that way they can get a better approval rate. Because clearly this person has more than one deal and he's doing business more in multiple places, especially with this kind of file.
Yep.
So he can go get better lenders and better rates and more deals for him as well. So teaching them and sharing that information has been, that's the priceless part. But I'm sitting here with you guys today in confidence, knowing that we can vet this deal and go back to my client and give them either a thumbs up or a thumbs down. And the best part about all of it, Des, is if we give them a thumbs down, we can turn that thumbs down into a thumbs up. If we can renegotiate and get the few pieces with Sua's help, I know we can do that.
Yep.
Exactly. But you also notice when you mentioned earlier, he got other business with others. So that means other people have other businesses too. So
yes,
one thing I know about why my business works so well, and I have never spent a nickel in Google ads or Facebook ads in 30 years. Why is that? Why would I need to? Business owners know other business owners. And when I help you on this deal, how many people you can tell? Bloody everybody, probably, right?
everybody right? I can.
You should talk to Sua. You should talk to Sua every time you hear something. It's like a business. I'm having a business. I'm having part time with my banker. Talk to Sua. Or talk to this, right?
Sua's like the fixer, like he's the he's the handler, he's the fixer, like you call him up
because
right. I need
you
cleaner,
you become the go-to you become the go-to person. Like you have your go-to plumber. Yes, you have the go-to mechanic. Of course. How about your dentist? Yeah. I tell everybody about my dentist, everybody about my plumber. Every time we hear a problem, same thing with us, right? But in residential, there's too many mortgage brokers out there. Commercial, who the hell that does commercial?
Who's good at it? Who's successful?
Well, even that, that's even more rare, right?
Who has the connections? Yeah.
So I think a question I need to ask you, Justin, before you even dive into learning about what I taught, right? Did you even see or pay attention to commercial deals ever?
To be honest, I didn't even know what I was looking at. So I didn't have the proper lenses to be able to even see or vet. And you asked me how many people do I know that's even in this space? In all of my time and experience, I know of one, maybe two of everybody that I've met to even can confidently speak about this. And we've been in, my brother's been doing residential. I've helped other people in residential, family members for 2 decades.
Yeah.
It is not lightly.
So all of a sudden, you got 4 or 5 deals in the last couple of weeks because you've gone through the workshop, or and talked to Sua. You know why? We call it RAS, and it's a technical term, right? Reticular activating system. It's like the car that you're driving. You never saw it on the road. Mm-hmm. It never exists in your mind until you bought it. And all of a sudden, everywhere you drive, you see the same car everywhere.
Yep.
Same thing with commercial deals. You don't see it until you put your effort, your mind into it, and then all of a sudden it pops up everywhere. Could you imagine how many deals you would have done in the last 20 years if you knew what I taught? You'd be super wealthy.
I'm gonna have to go and evaluate them.
All right, guys. So let's move on here, and then what we want to do is if you want to get more of this, we want to invite you to come to it. There's no risk. Come to the workshop, right? Pick up the tools. Come to the workshop. Ask questions. After that, you're your own worst enemy. If you can't figure out the commercial deals after that, after the invitations and the training, then that's not on us. That's on you for not wanting to be coachable, right? I'll just be straight up and let you know that this is not for everyone, right? And only if you want it. We should not want it for you more than you want it for yourself.
Yeah, I have all the tools, guys. Checklist, you name up the yin yang. There's a lot of due diligence that needs to be done.
What was the outcome of this deal? Like so far, it's still in play. Is it
it's still in play? It's an active deal. It looks very, very promising to me.
Yep.
It's just a matter of a few a few items we need to make sure flush out,
Yep.
right? Because at the end of the day, is the family office underwriter is going to ask the same question I'm asking.
Yeah.
And what's the answer I need to give them? I don't know.
Yeah.
No, you're not get the loan.
So it'd almost be better, right? Again, I'm going to speak. Remember, I played the role of being the person that's, you guys are watching this video. I'm going to play your role. I'm your voice for you right now until you come to the workshop and actually are live with us and asking questions. So it's almost better that if I took your training, and again, this is not a hard pitch or anything, but let's just face it. If someone's watching this video and they want to earn a $250,000 income, annual income, a multiple six-figure income, like a surgeon, like a pilot, like a lawyer, like any professional, you have to an MBA. You get an MBA at a university.
Yeah, you got to invest. You got to invest in. This is high ticket. This is not anybody can learn.
So we're just letting you know. Yeah, we're gonna do the workshop. You're gonna get Sua like this. 90 minutes. You're gonna get really intense. You get a feel for what he's like. Bring your questions. Bring your live deals. Present it. Right. That being said, though, at the end of that, we will invite you for the next step, and that next step may be higher education, whether it's be over a 3-day paid masterclass, or it's actually you saying, "Hey, no, I already know I need this. I'm sophisticated enough, but I don't know what I don't know." It's not about the how. It is the who. I want the who. I want to have the connection that Sua has. I want to have access to Sua. Then if that's the case, you're going to probably have a conversation with myself or Justin. You're going to book an appointment where we're going to vet you. We're going to find out about your experience. We're going to see whether you're coachable. And then that will maybe qualify you for the 12-month mentorship with the 6-week fast track cohort. That being said, there is an invitation below. The decision is yours to do that. Sua, any final words? And we're going to wrap it up here. By the time you guys come and join us in the next cohort, those are limited, right? You'll probably find out what was the result of this file, whether Justin closed it or restructured it. What was that turnout? All right. With that, Sua,
well,
back to you.
There's 300 grand on the table. We're not talking about small fries here, right? I mean, what I teach even now, even in the 1-day event, just a workshop, it made you dangerous enough that you won't sound foolish at least.
Right. Or at least they'll be able to see things, right? Like Justin, you'll be able to see and know what are potentially the particular activating system, RAS, right?
Yeah.
Start to see commercial deals, right? Commercial files.
Yeah. You will. You see a lot more every day from then on.
All right, guys.
See how much money you leave on the table.
Yep. We'll see you in the
okay, guys.
workshop. That's it. We'll see you in the next video.
See you.